Hello and welcome to another episode of the Mark Moss Show, where we talk about the decentralized revolution. We talk about it each and every week, the way the world is changing rapidly, and we look at it through the lens of politics, finance, and technology. And of course, it's always technology that changes the world as we know it. And there's a battle over technology right now, and it's going to determine how the world is shaped moving forward. And that's what I want to talk about today. If you're just tuning in, thank you. If you don't tune in on a regular basis, you should, because I talk about a lot of information. So make sure if you're not driving, pull out your phone, put a calendar reminder for this date, this time, this channel, and make sure to tune in with me each and every week. And if you miss any of them, don't worry, I got your back. You can check it out on the podcast. Just search The Mark Moss Show on your favorite podcast player. Or you can find me on YouTube, just on the Market Disruptors YouTube channel. You'll find, you can watch me and listen to me at the same time. But I want to talk about today how the world is changing really, really rapidly. And it's about to change even faster because of the technology. As I said, this battle over technology. And the battle over technology that I'm talking about is over money. I don't want to say the entire world. A lot of the world has been transformed through technology and specifically through software. You've heard the term probably, software is eating the world. And so we saw entire libraries of books become digitized. And now we can have all those books in the palm of our hand on our phone. And we saw music be digitized, movies be digitized. Think about, 200 years ago, if you wanted to hear Mozart or Beethoven, you'd have to hire like 100-person orchestra to come play Beethoven or Mozart for you. And then technology made it where I could listen to Beethoven or Mozart on a record, and then an 8-track, and then a cassette, and then a CD. And today, it's just digital. It just streams on my phone. I took 100-person orchestra, and now it streams on my phone. So we digitized libraries, entire books. Book libraries are on my phone. Entire orchestras are now on my phone. Of course, we saw that happen with pictures, with videos, with music. It all happened. But the last piece, I think, one of the biggest last pieces is money, is our financial system, which, of course, Bitcoin and cryptocurrencies are here disrupting all of that. The governments want to roll out their own central bank digital currencies, or CBDCs. That's the acronym, central bank digital currencies. And so that is the battle. Who gets to digitize money? Who gets to say what money is? So when we started to digitize music and movies, if you guys are old enough to remember this, it was a battle. It was a battle for the ages. As a matter of fact, the movie studios, the record labels, they fought it tooth and nail. Lawsuits were flying left and right. If you guys remember the early days of like Napster, we could like download movies and music. And they shut that down. They're trying to put people in jail and prison. It was wild. It was a wild time to live through. But of course they lost. They lost because there's a quote, I forget who says it, but a standing army is no match for a good idea whose time has come. And so when you have an idea, when there's something that's 1,000 times better, you just can't stop it. There's just no amount of laws, no amount of rules, regulations are going to stop it. If we look back in the 1500s, there was the Protestant Reformation. And what really led to the Protestant Reformation was technology. So 70 years before the Protestant Reformation, a brand new technology came out that was revolutionary. It changed the world. And that technology that came out 70 years before the Protestant Reformation was something known as the Gutenberg printing press. Now, before that, all books had to be handwritten, transcribed. And so, as you might imagine, there were not a lot of books because nobody even wants to read a book today, much less imagine trying to transcribe it letter by letter by letter. And of course, you wouldn't want to do that. Now, the Bible was the most translated book. Thousands and thousands and thousands of copies were created of the Bible, and it was all transcribed perfectly. As a side note, we won't get into that, but the Gutenberg printing press, the first book that they started printing, which was, of course, the Bible, which was, of course, the most widespread book of the time. And not just by a little bit, by an astronomical figure. I don't have the data in front of me. But what happened is that technology then started mass producing Bibles, so we got even more of them and started to spread that information. But the government at that time, the political structure, the political hierarchy that we had at that time was the church and state. And so in about 1100 AD, the church started to rise up after the Dark Ages. They tried to start putting all the pieces back together. Society had broken down really bad. And the church organized the people, and they did all the public service goods, and they fixed the bridges, they fixed the roads, they made clean water drinking systems. The church was amazing. They took care of the poor. They did the best. But over several hundreds of years, they got very corrupted. And they used their position between the church and the state, the government, to basically impose their will. They were able to hang on to that monopoly because they were the arbiters of truth. Sound familiar? They told the people what the Bible said, and that the only way to get to heaven, to get to God, was if you do what I say, which is all kinds of crazy, insane things that they had to do. Chivalry, they had to walk on one foot for a week to show whatever, right? It was insane. But what happened is that piece of technology, the printing press, disseminated the information, decentralized the information. And once people got the real information, they said, wait a minute, you guys have been lying to us. What you're telling us is not true. We can read it for ourselves now. And anybody that got that book knew that they were being lied to by their government, and they started talking about it. Hey, wait a minute, what you're saying isn't true. What you're saying isn't true. And they were labeled heretics. Anybody that was labeled heretics or talking heresy was killed. They were put to death. But it didn't matter. The truth was too powerful. A standing army was no match for a good idea whose time has come. And so the truth won out. And more people talked about it, spread the information. And it didn't matter how many people they killed, it was too much. And so the technology took over. And that's kind of where we're at today. So back to the money. So let's go back to this. So in 1694, a few hundred years ago, we had the first central bank. That's really where the central bank got started. Now, we could debate this. You can go back to however far back in history you want to go. But really, I believe this was the first central bank. There was a great book written on it by, I believe, Murray Rothbard called The Mysteries of Central Banking. I highly recommend you read it. You could find it for free on Mises.org, MISES.org. And it really talks about the creation of the central bank, the Bank of England, and then it kind of goes through this history of it. It's a great, great book. But anyway, so 1694, the Bank of England was the first central bank to issue what was known as bank notes instead of coins. So before that, like the goldsmiths were the bankers because they were the ones that actually minted the coins. They made the coins. They made the money. But the Bank of England was the first bank to issue bank notes, or basically fiat currency, or basically worthless paper currency. And the way this got its start is amazing. And I'm going to tell you this quick little story so you can understand the insanity of this. And so gold had been money for 5,000 years. Obviously went from a barter system into like a gold system. We had coins, which was the point I was making. We had these gold coins. But what happened is that if you can't get more coins, you don't have more money. Of course, we know, I'm sure you know by now, the Roman Empire had to debase their currency. Instead of 100% silver, it was 90% silver, so they had 10% more money. Then it went to 80% more silver, so they had 20% more money. And eventually, over 200 years, they went to no silver. So that's debasing. That's what they call that. And what happened is, we fast forward to the late 1600s, and England is at war with France. And it's the war that changed everything. Similar to how we're in a war today, that is also going to change everything. Here we are, late 1600s. We're in England. England's at war with France. Now, one thing about war is it takes a lot of money. Now, up until this point, wars didn't happen a whole lot because if I was going to go to war, it was going to cost me a lot of money. Do I have that much money? Do I want to spend that money? If I lose the war, then I'm broke. If I win the war, I might still be broke. And so wars happened less frequently, and they lasted very short periods of time until 1694 when everything changed. And so what happened is England and France were in war. England needed more money. They needed more money to go to war. Now, what would happen if you've watched any of these old movies like Robin Hood or any other movies, you know that the kings would have to borrow money from the rich people in the country. And so England was out there talking to all the rich people saying, hey, would you loan the kingdom money? Would you loan the kingdom money, loan us money so we can keep going to war? And a group of people came to the bank, the kingdom, the government in England at the time, and they said, hey, we have an idea for you. Let me float this idea for you. How about we'll give you as much money as you want? We'll give you an unlimited amount of money. And of course, the kingdom's like, well, that sounds great. We'd like an unlimited amount of money. What do we get? What do we give you for that in exchange? They said, well, here's the deal. We're going to give you as much money as you want, but here's the situation. We're going to create our own bank called the Bank of England. Sounds very official, right? We're going to, sort of like the Federal Reserve of the United States, we're going to create the Bank of England. And what we're going to do is we're going to create our own money. It's not going to be gold or gold coins. We're going to create this paper money. But what you're going to do is you're going to tell everybody in the country that our money is the new money everyone's supposed to use. It's legal tender, and they have to use it. And as long as you do that, then we'll give you as much of it as you want. And so they did. So we had the creation of the Bank of England. They issued the banknotes, and that highlights the insanity. Now today, fast forward a few hundred years, we have central banks all over the world. We have, obviously in the United States, we have the Federal Reserve. It sounds very federal. Of course, they're not federal, and they don't have any reserves, as we like to say. And all these other countries have central banks. In Europe, they have the European Central Bank. In England, still have the Bank of England is still there. In Japan, it's the Bank of Japan, etc. And then above the central banks, we have the Central Bank of Central Banks, which is the BIS, the Bank of International Settlements. Now, the central banks today, supposedly, their job is to maintain price stability. Maintain price stability. So when the price of homes double in a decade, is that a stable price? I mean, they doubled. When the price of my gasoline to fill up my car went up by 50%, is that stable? Now, that's in the United States. We have it good. About 3 billion people in the world, so about half, a little less than half, 30-40% of the people in the world today live under more than double-digit inflation. You got places like in Turkey where it's 80%. That means if you had $100,000 in your bank account today, in a year from now, it buys you about $20,000 worth of goods. Is that stable prices? Certainly not. So if I was going to rank central banks on their ability to have price stability, I would give them a big F, a big failing, which of course why the Federal Reserve in the United States is scrambling, trying to, quote, maintain confidence. Hey, look, we have this under control. We're going to fix this. That's why Jerome Powell at the Federal Reserve says he's committed to bringing inflation back down. It's too high. It's at 8%. Their goal is only 2%. Their goal is only still 2% of your wealth per year. They're stealing way too much. Now, if you understand the creation of the central bank and how insane it was, you understand that their goal is price stability, which they don't do. Now let's talk about technology, the battle over technology. So we've already seen money become digitized. I hear all the time people are like, oh, I would never buy this Bitcoin. Bitcoin's digital. I only want real tangible things I can hold in my hand. Well, over 80% of all financial transactions are already done digitally. I use a debit card. I use a credit card. I use a wire transfer. People put money into my bank account through my payment system. Like, we don't really handle that much money. Now, I get it. There's still some old people who are like still deal on a cash basis, but it's very rare. Now, in other countries, it's obviously more widely used. But in the United States, most of the Western world, developed world, it's all digital. But it's still different, all right? So the battle is, how do we move money into the digital age, just like we did with music, movies, books, etc. And so, of course, we have Bitcoin. Bitcoin was created, as a matter of fact, the white paper, which was the very first paper that came out explaining what Bitcoin was going to be, what it was all about, came out on Halloween. So just we're about a week, not even a week, a few days after Halloween here. Week after Halloween. It came out on Halloween in 2008. And then January 3rd, 2009, Bitcoin was released to the world. Now, in the very first line of code, Satoshi Nakamoto put a message in there that said, the chancellors are on the brink of a second bailout. So basically that tells us that Bitcoin was created as a as a reaction, as a solution to the central bankers printing way too much money and creating this crazy price inflation. It was created for that. It was created so that we had a way, us humans, people, to be able to transact just like cash, but in a digital age. And this is the key piece that we're going to hear, just like cash. What does that mean? Well, cash, you already know what it is. It's paper. It's paper in your wallet, right? And if I have this $100 bill in my hand, you know I have the $100 bill. It's my $100 bill. It's my $100 bill. If I hand it to you, then you have that $100 bill. Nobody's in the middle of that. I don't need to go take this $100 bill, go give it to this bank, and then you have to go get it from the bank with your ID or none of that. No, I just hand the $100 bill to you. There's nobody in the middle. It's peer-to-peer. There's no counterparty risk, and nobody needs to know about that. If I want to give it to you, nobody needs to know, but that's between me and you. Privacy. That's cash. Now, what's happened is as we've moved into the digital age, we've started to lose a lot of that. So now, if I want to pay you with Venmo, Venmo hooks to my credit card hooks to my bank, and then my bank talks to your bank, which then your bank talks to your credit card, and then your credit card talks to your Venmo. There's like 6 people in the middle of that, all taking a piece, all taking a cut, all potentially censoring us if we want. Like PayPal came out and said they're going to take $2,500 out of your account if you say anything bad online. Now they retracted that. Oh, no, we didn't mean to say that. We didn't mean to say it. And now they've come back out and put it back. So they did. They didn't mean for you to find out about it, and it's there. But who is PayPal to determine what I say and don't say online and whether I can spend my money? Right? In a cash environment, that would never happen. I have my cash. I can go to the bank. I can pull my cash out. I can come stuff it under my mattress if I want. But they don't want that. Now, Bitcoin was created to be a form of digital cash, but the central banks don't want that. The central banks want us to use a central bank digital currency. And this is the battle. We have this Bitcoin, we have cryptocurrencies now, which are the people's money. It's our ability to have something that we can transact with. And as I said, Bitcoin was created as this digital cash. Now, it's important to understand digital cash for a minute because you need to kind of understand how this works. The thing with digital cash is that, as I said, right, it's peer-to-peer, so nobody needs to know about this. But they don't want that. As a matter of fact, let's hear it directly from Augustin Karsten. He is the head of the BIS, the central bank above central banks. Let's hear what he has to say right here.
All our analysis on CBDC, in particular for the use of general use, we tend to establish the equivalence with cash. And there is a huge difference there. For example, in cash, we don't know, for example, who's using a $100 bill today. We don't know who is using a 1,000 peso bill today.
So there's a huge difference with central bank digital currencies, which they want to push, and cash. He said, so for example, we don't know who's using a $100 bill today or a 1,000 peso bill today. Yeah, and you shouldn't need to. You never have in the whole history of the entire world. This is a new thing. Look, you get this piece right here. This is a new thing. For all of history, all of recorded history, 5,000, 6,000 years of recorded history, mankind, humans have traded. We're born as capitalists. Little kids are in preschool trading sandwiches for chips. People are in prison trading cigarettes for whatever, right? Like we all trade as human beings. That's natural for us. So we traded chickens for pigs or for cows for goats or corn for whatever it was. Then we started using medium of exchange, which is money. Gold became money for 5,000 years. Then we had cash. It's only been really probably the last 25 years or so, probably really just since the Patriot Act, the day we lost more freedom than any day in history in 2001, that really the governments want to know every single $100, as Augustin Karsten said. We don't know who has the $100 bill. Yeah, you don't, and you shouldn't. You don't need to. In all of history, we've never needed to, we've never had to, and now that's a problem for them, they say. But it's a problem, and it's rich coming from a banker, and the reason why is because what it shows is this guy, he's literally at the very top of the org chart. It's the guy running the central bank of all central banks. It shows that he doesn't understand what economics or money is. Now, I'm not a trained economist, but he obviously doesn't. And the reason why he doesn't is because he's saying we don't know who's using it. That's the whole point of money. That's the whole point, all right? Now, pre-money, imagine if you're like in this little small town and I run like the general store and you have your farm down the street or whatever, right? That us being in this little town, I run the general store, I know you. We live in a small town together. I've known your parents. I know your kids. We all go to the same church, et cetera, et cetera. And so I know you, and so I extend you credit. And probably the guy that runs that general store says, oh, yeah, Jim owes me this much, and Bob owes me this much, and Sally owes me this much. And I keep a ledger of who owes me money because there's trust there. I know who you are. I know where you live. I know that you have the ability to pay me back, and so I extend you credit. Money or cash gets rid of the need of that. Now, if you come into my general store and you want a bag of whatever, of corn, I don't need to know you. You're going to give me cash. You're going to pay me for that right now. I don't need to know who you are. If I'm extending you credit, of course I need to know who you are. But if you're going to pay me right now, I don't need to know who you are. I don't need to know where you live. I don't need to know who your parents are. I don't need to know any of that. You give me the money, I give you the bag of corn. That's the way economies work. That's the purpose of money. But no, that's a problem. We don't know it. Now, let's hear what he has to say. Let's play the next part of the clip on what central bank digital currencies will fix in this problem or scenario.
A key difference with the CBDC is that central bank will have absolute control.
Let me pause that right there. The central bank will have absolute control. Let me just restate that again. The central bank will have absolute control. Let's hear what he's going to say about that.
On the rules and regulations that will determine the use of that expression of central bank liability.
So the central bank will have absolute control of the rules and regulations of how you can use it, or he said, express it. How you can use your own money. They will have absolute control. And the rules and regulations, let's hear the rest.
And also, we will have the technology to enforce that. Those two issues are extremely important. And
those issues are extremely important. That those two issues, what were the two issues? That they will have absolute control over how you can use your money, and that's point number one. And point number two, they will have the technology to enforce it. Those are the two most important things. So the first clip was, we don't know who has $100 bills or 1,000 peso bills or how they're using them, as they shouldn't. But with central bank digital currencies, we'll have absolute control and we'll have the technology to enforce it. Now, he's the top of the heap, as I said. He's the head of the central bank above central banks. What about in the United States? Because the United States would never do something like that. Like, we get it, right? We get it. Like China, China, the CCP, the Chinese Communist Party, they're communist. Of course, they have the social credit score system. Of course, China would roll that out, right? But what about the land of the free? Let's hear from Jay Powell, the head of the central bank, the Federal Reserve. Let's see what he has to say. As a matter of fact, I'm going to save that clip. We're going to come back to that clip in a minute because I really want the time to kind of break this down. Because, as I said, right, the home of the free, we should be a little bit different. Hey, but don't worry. I want you to understand the differences of central bank digital currencies versus cryptocurrencies versus cash. It's important because this is the battle that we're heading into right now. And you need to know what is at stake here. And then I want to show you, I'm going to give you a couple examples of where it's already being used in other countries and what it looks like there. This could happen in China, in the communist China, but could it happen in the land of the free? Let's hear from the head of the Federal Reserve, Jay Powell, what he has to say about central bank digital currencies. Let's play that clip.
If we were to pursue a CBDC, it would at a minimum have the following 4 characteristics. First is...
So he says if we were to pursue a CBDC. Now, we know that the Biden administration, or I should say not the administration, well, I guess it is the administration. We know Biden signed an executive order. I don't think Biden knows what he's signing, so I'll probably say the Biden administration. However, the Biden administration put forward an executive order. So an executive order is basically, I'm the king, I'm the czar, I'm the dictator, and you do what I say because I say so. So it doesn't go through a democratically elected process. There's no vote on this, none of that. But he put through an executive order that basically is mandating the government to work on a central bank digital currency. And so they are. Now, I guess Jerome Powell says if, because there's a lot of lawmakers in the United States pushing back on this, as you might imagine. As I said, this is supposed to be the land of the free. You're not supposed to have absolute total control, as Augustine Carson said. You're not supposed to have absolute total control over what I can do with my own money. But so anyway, a lot of politicians are pushing back. So maybe that's why he says if. Let's hear the rest part.
At a minimum have the following 4 characteristics. First is intermediated. Second is privacy protected. But third is identity verified. So it would not be anonymous. It would not be an anonymous bearer instrument. And fourth is transferable or interoperable. So we would be looking to balance privacy protection with identity verification, which has to be done, of course, in today's traditional banking system.
Oh, wow. Let's break that down a little bit. So it needs to be intermediated. Okay, so remember, cash is not intermediated. Cash is peer-to-peer. If I want to buy something from you, I hand you the $100 bill. That's it. There's nobody in the middle, no third party, no counterparty risk, not intermediated. He says it needs to be intermediated, meaning, of course, the central bank has to be in the middle of you and I, our transaction. Now, of course, when they are in between us, then they know everything because they have to approve or deny it. Right? Cash, if I want to come over to your house and buy something out of your garage and I hand you money, nobody needs to know that. Now, look, we have laws against certain things. If I'm coming over to buy drugs with cash, of course we have laws. Of course that's breaking the law. But it's not cash that's the problem. We have a law already to protect that. Now, the second part is, he said, second out of 4 is it needs to be privacy protected. But then the third point, so second was privacy protected. Third is identity verified, not anonymous. So if it's not anonymous, like cash is, how does it protect my privacy? Yeah, that's some mental gymnastics. Well, the answer is, well, it's not private from us, right? So we, the government, and everybody that works for the government, which is about half of the people in the world, or half of the people in the country today. So, us and our partners and our banks and our regulators and the FBI and everybody else, we all see it. But somehow it's privacy protected. I love that. That's rich. So, like cash, like Augustine Carr said, they don't know who has a $100 bill, but this is, they'll know. And then they want to balance privacy and identity verification. How do they balance that? It's not the same. All right, so we already have this in play in China, and now it's also in play in Nigeria. Now in China, as again, it's a communist country. Of course, it's in play in China. But what's interesting is even in China, where they control and regulate everything, we're seeing the transition to central bank digital currency is very, very slow. As a matter of fact, it's way slower than they want. And what they want, they get. They're forcing. As a matter of fact, it says transaction volume in the ECNY has only increased by 14% in the last year. So 14%, very, very slow. And so why? Why is it so small? Well, because people don't want to use it. That's why. To put it into different metrics, there's only been about $100 billion worth of yuan used versus in China, they use Tencent's WeChat Pay or Ant Group's Ally Pay for everything. And those have processed 118 trillion yuan. So 100 billion versus 118 trillion, a drop in the bucket. But a better example that I have seen that I really liked is over in Nigeria. So in Nigeria, it's important. It's an important example, and the reason why is because what happened is in the United States, we got the internet very quickly because we had phone lines everywhere. And then eventually we had wired internet, and then we got to wireless internet, like our phones. But in places like Africa, they leapfrogged us, went straight to mobile devices, straight to wireless internet. And so they're much more likely to adopt cryptocurrencies or central bank digital currencies than the United States. And that's exactly what happened. And so in Nigeria, they have the digital currency called the e-Naira. And it says that e-Naira the digital currency plan falters. It falls as Nigerians are defiant on cryptocurrency. Less than 0.5% of Nigerians are using the digital currency. So 0.5% are using it. The regulators across the world are scrutinizing every move because they want to know what's going to happen there and how do we get more people to use it. And now they're offering, so they're trying to go into like the rickshaws, into like the taxi industry, and they're offering a 5% discount to drivers and passengers of people who will use this. They're trying anything they can. They're subsidizing those rides to get people to use it. But so far, it's only attracted 1 out of every 200 people in the continent's most populous country. It says that the central bank's focus on the digital currency is creating confusion among many Nigerians who fail to see the difference between the government-backed e-Naira and cryptocurrencies. The heavy promotion of the e-Naira, just as they're also cracking down on cryptocurrencies, has them befuddled, it says. They don't understand. What's the difference here? I thought the government said cryptocurrency is bad, but now you want us to use this cryptocurrency. And so that's why the results have been very, very disappointing, as they say. I like this part here, though. It says, here's the reason why. Virtual currencies have lured residents of Africa's top oil producer as a hedge against inflation and currency depreciation. So people have gone to cryptocurrencies as a hedge against inflation and depreciation, but the e-Naira is a proxy for the same money. And the people have distrust on it. So they're like, why would we use a digital version of the same bad currency that we already have that has all of the bad attributes in it, and it's even worse? So it says here, the e-Naira does not address any of these basic use cases. It doesn't address any of the problems with the money. And it's even worse because now you want to have total control over what we can spend on our money. And that's the battle. That's the battle we're at. CBDCs will fix nothing. They will do nothing to fix the high inflation or the debasement that we're facing. They will only be more oppressive. Hopefully that makes sense. Hopefully you understand the difference of the CBDCs versus cash versus Bitcoin. You're listening to The Mark Moss Show, talking about the decentralized revolution, the battle over money. And thanks for listening.